Hi folks, and welcome back to Meaningful Money. Okay, I'm here with Porthcurno Cove behind me. That's where the cable comes in, I was telling you about last time. Beautiful spot, freezing November afternoon though, so but I mustn't rub my arms too much because the noise this jacket makes doesn't do much wonders for the audio. I said last time that I gave you last time some pointers for choosing a decent financial planner. Financial advisor, probably those two terms are interchangeable. If somebody asks me what I do though, I always say I'm a financial planner because it tends to foster a conversation, whereas if I say I'm a financial advisor, people run for the hills. Now, what is financial planning? Now, I'm going to sort of explain what I would explain to a new prospective client. And I must give credit for this to my good friend Dennis Hall of Yellowtail Financial Planning in London. He goes on Twitter by the name of Yellowtail FP. So look him up. He's one of the thought leaders really in the financial planning profession in the UK. This is what I would say to a prospective client. Usually I would ask, first of all, have you ever used a financial advisor before? And the answer is yes or no. And then this is what I would explain would normally happen. So you've seen a financial advisor before. Usually this is the process that they would go through. Firstly, they would ask you a series of questions, and they call that a fact find. And they would ask you about your pensions, your investments, your ISAs, your bank accounts, whether you've got any life assurance, things like that. And they would write all those things down because there is a regulatory requirement for us to know about our client before we advise them. So that all makes sense. But I suggested that what they're really looking for and what they're really doing is a gap find. And they're looking for the gaps, the things that you don't have, more than they are concerned about the things you do have. For the simple reason being what you don't have, they can sell to you. And so the whole purpose of the exercise is to come to a recommendation for you to take out some kind of financial product. Now, some good things can come out of that whole process. You may come out with some life assurance that you needed but didn't have before. You may have a better chance of meeting your financial targets than before, but it's just all really about getting to a product sale. Not a fact find, but a gap find, and more about the product than anything else. And the question must be, how does that process meet your aims, your financial goals? And the answer, I think, is it doesn't, because it doesn't even ask about those. It asks what you've got now, and by interest, sort of, what you haven't got now, so they can sell it to you. This is how I believe it should be done. Firstly, we need to do the same thing to a point. Establish where you are now, what you have and what you don't have. But vitally, we need to establish where you want to be in your financial planning. What does retirement look like to you? What do you want to give to your children one day? Ask questions about the future. And when is that future? Is there a point in time where you want to achieve these goals? And a good advisor will ask searching questions about those things. Look back to episodes 3 and 4, right at the beginning of this journey called Meaningful Money, where I ask some of those questions, and perhaps you can answer them for yourselves. But a good financial planner will ask those things to try and give some context to the financial plan. We've got to know where you want to be and roughly by when. Now, a good advisor should be able to distill your long-term plans to some kind of a number. Now, that could be an income level, or it can be a amount of money in assets you've got, including property and things like that. But they should be able to distill that to some kind of target number. So we're now aiming for something concrete by a given date. So we have to determine, based on what we know where you are at the moment, based on what you're going to be able to contribute to your financial plan in the future, we need to find out whether or not you're on target. Now, there's various factors to consider when we can to help us decide that. Firstly, what level of risk are you prepared to take? Because risk, to a greater or lesser extent, determines reward, the level of growth you're going to get on your investments and plans. What we want to do is beat inflation, and we want to hit our target. So, what level of risk are you prepared to take? That needs to be a very detailed and technical discussion. What about tax? Are there tax considerations to take into account, either now or in the future? Do you as the client have any ethical constraints? Do you have really strong feelings about what you will and will not invest in? Because these will have an impact on your the progress of your investments and will help us determine or not whether you're going to be on target. So, what if you're not on target? What if, having looked at where you are now, what you've got to put aside, and all those factors, what if we decide that you're not on target? What on earth are we going to do then? Well, we could help educate you to reduce your expectations. If you're putting £10 a month into a pension and think you're going to retire on 50 grand a year, we need to sort of alter your expectations a little bit. Perhaps we can push the timeline back. You say you want to achieve your financial plans by age 55. Maybe we're able to say, a good advisor will be able to say, well, actually, that's unrealistic. You need to be looking at 60 or 65. Then you've got a good chance of hitting your goals. Maybe we can increase your exposure to risk if you're happy with that, to somehow, get a better return. Maybe we can look at practical considerations, like perhaps one day selling your house and downsizing, or things like that. These are options if we determine that you're not on target. Knowing all these factors and putting them all together, and knowing what we know about tax law, about investment theory and practice, about the need for insurance, and all the things that we're supposed to know as financial planners, using all that, we can then define a strategy for you. Put in place a set of plans and intentions which, if they're stuck to and regularly reviewed over time, will help you achieve your goals. Only when that strategy is defined, then and only then can we implement that strategy. Now, you remember with the old way, where it's a gap find, the implementation bit, the doing of some kind of product, is, they get there really quick. Well, a good financial planner, that is the very last stage in the process. All the work is done and all the value is given, I believe. Before that, the products are merely tools, means to an end, to help the financial plan get and stay on track. The value then is in the planning. That's where the skill is, and that's why you need a competent, qualified advisor to do that. The implementation can be done by anybody. Any monkey can arrange, a life insurance policy. You can do that online with Tesco, for goodness sake. But there's a lot of choice, so an advisor can help you there. But for me, the skill and the value is in the planning process itself. Now, that's not for everybody. Not everybody's going to go through that process. But for those who feel they do, I think that's where the value is. And so that's where the advisor should, I believe, be paid, rather than just implementing products. So that's, to me, is what financial planning is. Establishing where you are, where you want to be, and when you want to get there. Determining whether or not you're on target based on the factors that we talked about, risk and ethics and taxation and things like that. If not, then looking at what the options are, either to get you on target or to reduce your expectations. And then working with you over the long term to make sure that whatever strategy we put in place stays on target going forward. And that's relationship. That's 20, 30, 50 years maybe. So that's financial planning. What is financial planning? That is financial planning. It's that framework of putting things in place to help you achieve your goals. I hope that's helpful, because that's what you should be expecting. If you're in the market for this sort of level of financial advice, that's what you should be expecting from your advisor. So I hope that's helpful. So thanks for watching. No idea what I'm going to talk about next time, so I won't promise anything. But from Porthcurno Cove, thanks for watching, and I'll see you next time.